nobody is talking about this. Nobody's talking about the most reliable, highly tested reversal pattern in all of trading, whether you're trading stocks, crypto, commodities, it doesn't matter. The bump and run reversal pattern is the best traded pattern in all of trading, the best reversal pattern in all of trading. And we missed it the first time. We missed it. Now, while I was so busy looking for and analyzing reversal bottoms, like how we have going here, starting from A to lead-in phase and all the way to final bull target, we missed the reversal top that happened right in front of our eyes. Let me show you. Let me zoom in and get it lined up correctly. We missed it. So according to the pattern, how the pattern's supposed to be drawn out, you're supposed to have the first line the angle will be somewhere between 30 and 45 degrees. We have a 34 degrees angle here. The second angle is from the end of the lead-in phase, which is supposed to last for 1 month. It's supposed to be anywhere from 45 to 60 degrees. We have 49 degrees here, and we have multiple touches here. And we missed it. And from the idea is, once you have a top, you're supposed to sell somewhere around here. We'll get a retrace back to this line. Then you're supposed to sell somewhere going on the way up. And on the way down, you're supposed to start a short right here. Very textbook, and that's called the run phase. And then you can sell anywhere down here, wherever you think it's going to go, using your other techniques. But we missed it right in front of our eyes, and I'm ashamed of myself for that. I originally thought we were still going to go to, from here, I thought we were going to go to 100K. Then as I got wiser and smarter along this dip, I said, we're going to 71K. That was my low of where I thought we were going to go, and we only hit 69K. But that's another story for another day. Right now, we have one of the biggest reversal patterns, the best performing reversal pattern in all of trading happening right now, right in front of our eyes. If you can see the diagram here, it's showing us what it should look like. It's not going to be exact, as we got this little chunk here that typically would be at the top of this lead-in phase and then a straight drop down compared to this straight drop down, but typically it's all the same. We go back to what we were looking at before. We want that first angle to be anywhere from 30 to 45 degrees. We have a 45 degree angle here. I mean, we can fix that if we want a little bit. Negative 42 degree angle from there with multiple touches. And then we also have the big lead-in phase line, which starts here. And this line lasts for, it looks like 3 months if you want to count that. The longer the lead-in phase lasts, the longer the bump phase is going to last. You can find all this information on thepatternSite.com and type in the bump and run pattern and get all that information yourself. This is where this was pulled in from. And so at the bump phase, what we're supposed to see from here, as we're currently at 21,500, if we look at the diagram, we're going to see, I believe we're somewhere right here in this area. We're going to see, we're either going to see a slight pullback, or we're going to see just a continuation and then a pullback. But none of that matters. None of this matters. All we have to do is get through this phase here, this area here. So mark it out. This area here, we just have to get through that. Whatever little pullbacks, whatever pattern is made here, it's insignificant. As long as we stick to the basics of what a bump and run reversal pattern does, then we are going to make our way back to this, what we call a throwback line. We're going to hit this line. I estimate it to be somewhere between, I'm estimating 32K, but we could go all the way up to 34K. Somewhere between 32 and 34K, we're going to touch this line, and then we're going to get a pullback. How far that pullback will be, we'll see. It shouldn't be very much, especially with bullish continuation. We do have to keep in mind that we're in a phase of the economy where not a lot of money is being spent, but there are a lot of people and a lot of corporations who still have money sitting around, and that's part of the whole point. It's another discussion for another day, but we're at a point where once the recession hits, there's literally no money left, and I believe the Fed wants us to they want to get to the point where wages are the cost of wages are dropping, so then that drops the amount of money that it takes to buy goods, and then that brings down the influence and strength of inflation. That's the whole point. That's a whole nother story for another day, but that's the whole point of us going into a recession. So I believe we'll have a dip on the recession. This would be the perfect spot. If corporations are following this pattern, if they're following these metrics, which some of them should be, we're going to have a pullback somewhere. And I wouldn't be surprised if the pullback is all the way back to 20K, honestly. But nonetheless, if we keep with this pattern without any black swan events, that would be considered a black swan event. The recession happened. Everybody keeps asking, oh, black swan event would have to happen in order for the COVID dip to resurface. COVID dip, where is it? For this COVID dip to happen. Well, the black swan event, in my opinion, which seems very obvious at this point, is the call for an official recession. We need a recession in order for the economy to start over. But nonetheless, we get a pullback of some sort. But if we stick with the strict technicals of the bump and run reversal pattern, we're going to get multiple tests of this trend line. And that'll be our stair-step down pullback that will shake out a lot of people, because the less violent it is, the more people just slowly, emotionally and psychologically start to give up and think that we're going to go, much lower. And that's if we stair-step sideways. So I believe we'll stair-step sideways down this leg. We might have one capitulation event. Say the black swan event happens. We have one big weekly wick that comes down and pulls liquidity from this zone. And then we pull right back up. And then we continue to my targets. Everybody wants their targets. My targets are this 38.2% Fibonacci line at near 36K. Also the 50% Fibonacci line at 42,256, and ultimate target somewhere between 48,500 and 52,000. Now, keep in mind, I'm not saying this is a new bull market. This is not a new bull market. If you take a look back at what happened after the, let's see, which one do I want to use as the example? If you take a look back at the COVID run or the COVID dip, we made our way back up to what's considered the 61.8 Fibonacci mark somewhere here, and then we had a pullback and then a long sideways or monthly sideways until we then accumulated and then broke out above into a new bull market. So we're not going to have a bull market until we take a pretty big dip from 48 to 52K if we get there, or from 42K or from 35K. We're not going to have a bull market until we have a big dip back, possibly big dip back, and then shake out a lot of people, get them out of their positions uncomfortable, and then we make our move back up. So go to thepatternsight.com or just Google search bump and run pattern, and you'll see for yourself. I've been working on this for a few weeks. The previous pattern took a few days, but this is what I came up with. Nobody's talking about it. You want to know why we're going to continue to go up, how we're going to continue to go up to 30 something K? Here it is. I'm showing you right there. And all the information is there for you to understand why this bump phase has to happen. All right, so if you have any questions, hit me up. You know where to find me. And that's going to be it for today. Thanks.